Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. What a day. We had the ECB. Really no surprises. In fact, if there was a surprise, it came earlier in the morning. Flash PMIs in the Eurozone really at 4-year lows, and the Euro started off very weak ahead of the meeting because of that. Now, of course, Mario Draghi really hit on the slower growth than expected coming out of December. Now, they do show some hope that this is going to change, and they essentially left the rate hike in the second half of the year after the summer still on the table, although it's becoming in doubt if the growth stays on this path. And again, they confirmed that although it should bounce back, it's going to stay on this path for a little while. They downgraded their outlook. The euro has responded. We're seeing the euro lower. It's right in that 113.5 range. Now there is a lot of support down here. You want to understand that, but you close so weak today, it's really usually leads to lower activity. The dollar index to the upside did not help the euro's case. Now we had a better than expected jobless claims report. We also had better than expected flash PMIs in the U.S. It shows that we're not heading into recession. What everybody was talking about, but no being facetious there. But ultimately, the dollar index is rising, and that's running into some resistance. 96.5 area all the way up to 97. You had a lot of volume that traded there through the middle part of December after putting that high in. So watch that dollar index. That's going to be important. But ultimately, if we're looking at the continuous chart where you had the December contract for the dollar, the December contract for the euro, things are going to change a little bit. There's a little more room to the downside, and that's what worries us. So ultimately, we have to have more of a neutral outlook on the euro because of this. But what can change that? Now, the U.S. data, we're not going to see durable goods tomorrow because of the government shutdown. And ultimately, too, the government shutdown is weighing on U.S. GDP. We said earlier in the week, the White House has said that every week the government shutdown lowers GDP by 1/10. But tomorrow we do have German assessment and conditions coming out. This is going to be an important read. We have to start to see the sentiment data start to turn. We have to start to see these start to turn, and Germany's really got to lead the way on this. And that's where we can see the euro try to bottom. That's what's going to make the euro not follow through to the downside tomorrow. So wait and see. And if this does beat tomorrow, we could start to see a consolidation back up against that support, against those previous lows in the March contract. So stay on the lookout for that. But if that misses in the morning, we're going to see selling, and we're likely going to see new lows in that March contract, and the dollar index is likely going to be at 97. So be careful with looking at all of that. Now, with the yen, it is holding ground. Not a whole lot of news out there, but the equity market volatility, if you see that, again, if the equity market rolls over a little bit, starts moving lower, you're going to get the yen reinvigorated, moving out above what's a crucial level around 92 to 92.5. Above 92 to 92.5, we think the yen is almost in a melt-up range. If it gets back up there again, you're going to see the buyer step to the table quickly, not only on the technicals for the yen, but it's most likely going to be other markets are going to encourage that too. Again, the equity market potentially rolling over if the yen was up there. Now, the Aussie dollar is trading lower. It was actually the weakest one against the dollar here today outside of the euro. The Aussie dollar started off on a good foot last night with a better than expected employment report, but that was dampened quickly after you're starting to hear potential that the RBA is going to cut rates this year. Now, there's a lot more to this internally in Australia and having something to do with the banks and the mortgage rates. We won't get to that here, but what you have to understand is this has weakened the Aussie dollar. Now, on a technical basis, we did say it was exhausted at the recent highs, and we did have a key level that we said that we could focus on, but really major 3-star support, it's starting to get closer to major 3-star support. So look at that level. We have on the FX rundown earlier in the week. That's going to be crucial. But again, now they're starting to price in a potential a rate cut in Australia, and that's not going to be favorable for the Aussie dollar. But you can see if some of these winds blow by and it passes, and then the Aussie can recover. But as well, you have the U.S. and China trade talks. Comments from Wilbur Ross definitely did not help today in that scenario. But as the U.S. and China trade talks get closer next week, the Aussie dollar is going to be very crucial to watch as it is a pulse for those talks. Now, lastly, with the Canadian dollar, somewhat of a quiet session. You did see crude oil actually rally as news from Canada is going to cut their output about over the 600,000 barrels. So you saw the crude oil rally, and that held the Canadian on ground against a stronger U.S. dollar today. Now, we are fairly neutral, the Canadian. We see some value as it's testing near a major 3-star support level. But given the overall outlook here, things like the Aussie moving lower, and then us finding the crude oil overvalued up here in the near term, you may want to be more patient with that Canadian dollar. We remain more neutral there. Give us a call. We're here to help with anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.